Hi guys, welcome to today's video. Today we're going to be talking about something that a lot of traders, I believe, don't talk about as often as they should, and that is how to trade support and resistance the right way, or rather how support and resistance is setting you back, because I believe that a lot of forex traders, myself included, are being set back by support and resistance. They use the use of support and resistance in the wrong way. So in today's video we're going to get into how to trade it the right way and how to use support and resistance in your favor instead of always finding yourself in the losing side of the market, right? So yeah, stay tuned. And before we get into the topic at hand, this video is in partnership with Super Forex, a registered ECN broker with everything that you need from a broker, all kinds of accounts and all kinds of base currencies and all kinds of instruments for you to trade.
Dozer made it.
Right, before I say anything really, I would love to make a certain point here. It's always a good idea to trade the market structure instead of trading support and resistance. Shout out to my boys in what's his name again, Vista Bay or something like that. I'm not sure. It's always a good idea to trade the market structure instead of trading support and resistance, and using support and resistance as your TP and your stop loss, sort of your TP or your stop loss and exit point, right? As your exit points. So without any further waste of time, let's get straight to it. Here we are on the MT4 Super Forex MT4, and like I said, it's always a good idea to trade the forex structure, the market structure, instead of trading support and resistance, right? So by structure I mean reversal patterns, right? Reversal structure or continuation patterns. It's always a good idea to trade those instead of trading support and resistance, and using support and resistance for your take profits and your exit points. So let's start with this double top here. As you can see, here's a double top, and one of the best ways to trade this double top is at break, right? Is at the break here. Yeah, but where you could exit is by how to measure your take profit when it comes to double tops is by taking the pips from the top of the structure, right? From the tip top of the structure down to the neckline of the double top, and measuring those pips going down, right? Measuring those pips going down, which is somewhere here. Now if you highlight this as a zone, this area as a zone, let's imagine that all of this hasn't happened, and you highlight this as a zone. As you can see, the moment the market started touching this zone, the moment the market broke below this zone, the market gave us this structure, this continuation structure to the low, right? To the low, right? So as we continue, let's imagine you took the trade and you exit here and you wait for the next market structure. Like I said, it's always a good idea to trade the structure and not support and resistance. So as you can see here, we have a continuation pattern that goes something along these lines here, something like this, right? Hold on, something like so, right? It's a continuation pattern of sorts. And if you take, one of the best ways to trade this one is by measuring these pips here, so you take this impulse, right? Let's start it from here. You take this impulse and you calculate it all the way down, and as you can see, when the market came down to touch this area, right, this area of interest, then we have all this consolidation taking place here, right? So that's the first example of how to trade the structure instead of support and resistance, and using support and resistance and as exit points to your trades. Let's move on to the next example for further clarity. In this example, we have something very interesting that takes place here, right? First and foremost, we have this structure that takes place over here, something that goes along the lines of an ascending channel of sorts, right? So now that we have identified this structure, let's go on the 4 hour to see if there's any kind of, yeah, when it comes to this previous support and resistance zone, from this double top we still have this resistance, right? And we entered here, we exit here, but this resistance is still valid all the way down there, right? But it doesn't mean that you have to trade support and resistance just because the price is there. It's rather a good idea to trade this structure here, this one, right? Because this structure number 1 is an ascending channel, which is skewed, yes, but it's still an ascending channel. Not only that, this ascending channel has the first touch here, the second touch, and a third touch. Not only that, inside the channel we have a double top. Not only that, we have a double top with a nameable candlestick pattern here, which is a high test or a candle or a pin bar, right? So we have all these confluences to enter for a sell. Not the matter of trading this resistance level because it's there. No, we are trading the market structure, right? Good. So like we did before, in this example we have another interesting scenario where now we have this structure, the ascending channel and the double top. So you have 2 TPs. The first TP, let's start with the double top, right? Like we did with the previous example, you take this amount of pips, you measure them down here, and if you highlight this zone, you realize that the market broke below and started building the structure. But not only do you have this TP right here, but you have the TP of this market structure. 90%, when it comes to the 90% rule, 90% of this structure, right? So let's measure this real quick. How many pips are these from here to the very top? That is 268 pips. 268 pips, right? As you can see, I just calculated the 268 pips times 90% is 241 pips, right? So if you go back to the platform, 241 pips is somewhere down here. 241 pips, right? Somewhere down here, as you can see. And if you identify that zone, which is somewhere down here, as you can see, that zone was respected multiple times, right? So you have the first option of exiting here based on the double top, or you have the second option of exiting down here, which is a result of this larger structure, right? And even if you trade this structure here, I don't know, maybe I can identify it, I can identify it as some sort of a continuation pattern of sort, a rising wedge, something along those lines. It's not perfect, but it's not clean, but it's a structure regardless. And you measure these pips here, and you take it from the break of the structure. And as you can see right here, we have a resistance that's down here, and the market did touch and respect this structure before breaking. But as you can see, moving forward, it was respected in a number of times, not only here, but it was respected here before it was broken again, right? So that's the second example. Let's move on to this example right here for further clarity. When it comes to the third example, as you can see, we have a double bottom here, right? Let's highlight it. We have a double bottom here, right? But not only is it a double bottom, but it's a unique double bottom, given the fact that it has a second leg that is some sort of a structure. Therefore, we can call it some sort of an arc, maybe, right? As you can see, there we go, there's a structure, right? So like any other double bottom, we're gonna measure it the exact same way over and over again. We take these amount of pips and we identify this zone right here as the TP, as the take profit, right? And as you can see, the market did The market moved impulsively, came back to retest, right? Came back to retest the structure before moving for 200 pips when it comes to Euro USD to this zone. Now here's the interesting thing that happens when it comes to this zone. Unlike the previous examples, I can imagine you may have taken this double top for a sell, which is understandable, and also you may have taken it as a structure that goes something along these lines, right? Maybe, which is kind of justifiable. But that's where proper risk management comes in, right? That's where proper risk management comes in, and it's you know, the importance of proper risk management, especially when it comes to the TP zones, especially when it comes to those zones where you take your TP and you're anticipating a reversal. It's always a good idea to use proper risk management around those zones, right? But as you can see, another structure has been built instead of this double top, which was invalidated. And as you can see, we have a continuation pattern, right? We have a continuation pattern that goes along the lines of something like so, right? And like any other continuation pattern, you take the impulse of that pattern, right? And you measure the break of that pattern. Or rather, when it comes to symmetrical triangles, it's always a good idea to measure it from the second touch of, or the second or third touch of the support line of the structure, right? And if you take it in such a fashion, right, you have something interesting that takes place. You have this TP down here, or up here rather. And while you have this TP up here, something very interesting happens. When you look at this structure, this zone, which is this structure's take profit, this zone became a neckline over head and shoulders. Because if you go on the 15-minute, as you can see, we have, hold on, as you can see, we have a head. Here's a shoulder, a head, and another shoulder before the market broke below and went down. So that's pretty much how efficient and how powerful trading structure instead of trading support and resistance can be. Let's move on to the next example for further clarity. On the last example, I want to involve higher time frames here. So as you can see, the market was not really moving clearly, from back here, but here we see a clear setup, a very clear setup. Here's a continuation pattern to the high, some sort of a pennant, or a bullish flag, whatever you may call it, whatever floats your boat, right? Here you go, there it is, right there. It's very clear. These are the kind of setups that you don't miss really as a trader or a price action trader. And when you take this one from the break, instead of an expanding triangle, or rather symmetrical triangle, you take it from the second touch of the support or resistance line. But in this one, you take it from the break. When it comes to flags, you take it from the break, right? And when you take it from the break, here's the zone in which you're gonna have your TP, right? There's a zone that you're gonna have your TP. But something interesting happens on the higher time frame, right? Where on the higher time frame, when it comes to this TP, the market moves to the TP, and something interesting happens on the higher time frame. But before we get to that, as you can see, let's go on the 15-minute. And as you can see, after this structure, we have this structure here, which is still a continuation pattern on in and of itself, and it's a bullish flag. Right, it's a bullish flag with a third touch confirmation, right? First touch, second touch, third touch, and we measure also from break down here, and we measure from here up there, and it still concurs. It still concurs with the previous setup at hand, and it moved. If you take it from break, it moved for more than 50 pips, 70 pips, thereabout, right? Thereabout. So after we've now identified this zone, if you go on the higher time frame, perhaps you wouldn't have taken this trade because it's not exactly clear per se. Even on the 15-minute, if I'm not mistaken, it wasn't really clear. Yeah, it wasn't really a clear setup or anything like that. You probably could have said it's an ascending channel or a rising wedge. Maybe, I'm not sure, but I wouldn't have taken it at all. I would have ignored it. But on the 4 hour, something very interesting happens. As you can see, here's the zone that we identified, right? And if you were to draw this structure here, we have something interesting that takes place, that being a structure that goes something along the lines of an ascending channel, right? An ascending channel like this, whereas now you have the first touch of the resistance line of the channel, the second touch, and a third touch on the zone that we identified right here. And on that third touch, as you can see, let me move these two. As you can see, we have a candlestick pattern here, a reversal candlestick pattern, which is a rejection, a high test, right? A pin bar, right? Or an evening bar, whatever it's called, whatever you want to call it. And as you can see, the market did indeed drop to the low. So yes, that is how I personally use support and resistance levels in relation to market structure. Instead of trading support and resistance and ignoring market structure gives you clarity in terms of when and where to exit, and we use those as support and resistance zones in which we're going to take our profits, right? So I hope today's video has given you more clarity and it has opened your mind to a different perspective. And I hope you've taken value from this video. If you guys are interested in Euro USD signals, please, there's a link down below. Feel free to contact me on my WhatsApp or my Telegram, and you will be added into the program. And yes, this video has been made in partnership with Super Forex, a registered ECN broker with everything that you may need as a forex trader. So yeah, other than that, do not forget to subscribe, hit the like button, share with your friends, and also comment down below what kind of videos or which videos would you like me to do next. Yeah, so until next time, peace out.